course, we examined each ratio of the 8 companies and decided to compare 2 of the best one, which is New Hong Fed Holdings Berhad and Power Berhad during 3 years. We will also briefly compare the best performance on the ratio analysis for the other 6 companies. So here is key ratio analysis. We have 4 parts. The first one is profitability ratios. This one we want to know that how well does the company generate profits. The second one is liquidity ratios. This one we want to know, does the company have enough cash to pay the bills? And the third one is leverage ratios. So here we want to know that how extensively is the company using debt. And the last one is efficiency ratios. So we want to know how efficiently does the company use its assets and capital.
Margin tells us how efficient a company is at generating revenues based on their spending. Based on the graph, it is shown that Power Berhad boasts the highest margin from year 2019 to 2021. This shows that their operation is the most cost-effective compared to the other 7 companies due to their ability to generate sales amounts that exceed their cost of goods sold significantly. Thus, more resources can be freed up to help expand the business like building new factories or investing in foreign countries. On the other hand, Pelican International Corporation Berhad's operating efficiency were poor during the same period, ranked bottom in year 2020 and 2021 and only ranked higher than RGB International Berhad in year 2019. From here, we can deduce that they were not utilizing their resources effectively to generate income. This can decrease the confidence of shareholders, and as a result, they will suffer a loss in capital due to shareholders releasing their shares. Lastly, net profit margin tells us whether a company is generating enough profit from its sales while also keeping their operating costs at an optimal level. Based on our findings, the trend is that most companies have suffered from the COVID-19 pandemic in 2019 and their net profits are lower than 2020 and 2021 before rebounding in the following years. That was because the lockdown in most parts of the world had limited business operations, which led to declining GDP and incomes.
Now I'm going to explain about return on total asset, which indicates how profitable a company is relative to its total asset. Based on the analysis of 8 companies, Power Berhad has the highest return on total asset, which is 7.16% in the year of 2020. This proves that Power Berhad outperformed other companies in utilizing its asset to generate profit. I'm going to explain about return on equity, which indicates the efficiency of company's management is at generating income and growth from its equity financing. For the year 2022, the company with the highest return on total equity is Sports Toto Berhad, which is 18.58%. It means that Sport Toto Berhad has better ability to generate income by converting its equity financing into profit of the company.
Current ratio is an index that measures company ability to pay its short-term obligation within 1 year. Based on the analysis in 2022, New Hong Fed Holding Berhad recorded the ratio at 6.56 while Power Berhad recorded at 2.67. This indicates that post-COVID-19, New Hong Fed Holding Berhad has a greater ability to pay its short-term obligations than Power Berhad. The current ratio is usually above 1 is usually a good thing, but too high could indicate that the business is not making the best use of its current assets. For example, a company could invest that money for research and development rather than having a large amount of liquid asset. Generally speaking, a company's or business model may operate perfectly fine with over ratio. In overall, Textile Holding Berhad has conducted the most stable current ratio over 3 years, which is 4.67, 4.16, 4.63 respectively in 2020 until 2022. An asset test ratio indicates that company liquidity, so they have sufficient short-term assets, excluding inventories and prepayments, to pay off short-term liability. Based on the analysis, comparison between 2 companies indicates that New Hong Fed Holding Berhad during post-pandemic in 2022 recorded a very high ratio of 4.19, while Power Berhad recorded at 1.63. Power Berhad can only pay RM1.63 for every RM1 in current liabilities, while New Hong Fed Holding Berhad can only pay RM4.19 for every RM1 in current liability. So New Hong Fed has a higher asset test ratio compared to Power Berhad, indicates a relatively stronger liquidity position. The ideal asset test ratio for a given company varies depending on the markets and industry itself. For instance, a well-established company with a long-term contract income or one with excellent credit may find that a relatively low asset test ratio is less important since it can more easily obtain short-term financing should the need arise. Overall, New Hong Fat Holding Berhad has the most ideal asset test ratio during COVID-19 period out of all 8 companies.
Okay, so there are two types of solvency ratio, which are debt ratio and time interest earned. The term debt ratio refers to a financial ratio that measures the extent of a company leverage. As we can see in the graph, during the COVID-19 pandemic, New Hong Fat Holding Berhad's debt ratio was 0.16 in 2020, increased to 0.19 in 2021, and then dropped to 0.14 in 2022. On the other hand, PowerRoot's Berhad's debt ratio was 0.3 in 2020, dropped to 0.24 in 2021, and then increased to 0.31 in 2022. For the ratio analysis of 8 companies, Texan Holding Berhad had the lowest debt ratio over the 3 years, which was 0.17 in 2020, 0.16 in 2021, and 2022. So the time interest earned is the financial metric used to assess a company's ability to pay the interest part of its debt obligations. During the COVID-19 pandemic, New Hong Fat Holding Berhad's time interest earned increased from 58.38 in 2020 to 109.7 in 2021 and then to 136.68 in 2022. On the other hand, PowerRoot's Berhad time interest earned increased from 124.78 in 2020 to 179.94 in 2021, but then decreased to 109.26 in 2022. Based on the ratio analysis of 8 companies, RGB International Berhad's time interest earned was the most stable and increasing constantly and obviously over the 3 years, which was 20.72 in 2020, 63.65 in 2021, and 192.33 in 2022.
The inventory turnover ratio is an indicator of how efficiently the companies manage their inventory and avoid waste. According to the analysis, New Hong Fat Holdings Berhad had the highest ratio in 2020 at 3.47, which dropped slightly to 3.17 in 2021 and then increased to 3.46 in 2022. PowerRoot Berhad started with the highest ratio of 2.71 in 2020 and 2.28 in 2021 and then decreased to 2.27 in 2020. In summary, the high inventory turnover ratio usually indicates effective inventory management. It helps to provide a comprehensive evaluation of companies' financial health. Overall, New Hong Fat Holding Berhad has the most stable and ideal inventory turnover ratio among 2 other 7 companies. Receivable turnover ratio. The account receivable turnover ratio measures a company efficiency in collecting its receivable. New Hong Fat Holdings Berhad account receivable ratio was 5.18 times in 2020, which declined to 4.86 times in 2021 before rebounding to 5.66 times in 2020. In contrast, PowerRoot Berhad had achieved a ratio of 3.67 times in 2020, a modest increase to 3.7 in 2021, and a significant rise to 5.50 in 2022. Despite the challenging post-COVID-19 environment, both companies' account receivable turnover ratios improved their ability to collect on account receivable in 2021-22 compared to 2020. The account payable turnover ratio measures how quickly a business pays its creditors and suppliers that extend lines of credit. New Hong Fat Holdings Berhad accounts payable turnover ratio increased from 17.58 times in 2020 to 19.58 times in 2021 and then to 24.34 times in 2022. PowerRoot Berhad's accounts payable turnover ratio rose from 6.84 times in 2020 to 7.58 times in 2021 and then to 10.30 times in 2020. This indicates that New Hong Fat Holdings Berhad was more efficient at paying back its credit than PowerRoot Berhad. That's all from me. Thank you.
So now I'm going to explain about valuation ratios. One of the valuation ratios is price earning, or also known as PE ratio. PE ratio is the price that the market is willing to pay for a company's current earnings stream and very useful in making investment decisions. From the analysis of 8 companies, New Hong Fat Holding Berhad has the lowest PE ratio in the following 3 years that will attract investors to invest in their company. Next is price-book ratio that measures the market valuation of a company relative to its book value. Based on the analysis of 8 companies, the company with the most stable and highest price-book ratio was Milas Corporation Berhad that offered the most attractive investment opportunity for their investors. Other than that is dividend yield that measures shareholders' cash return for their company investment. Based on the data, New Hong Fat Holding Berhad and PowerRoot Berhad had a very high dividend yield, which means these companies paid out more to their shareholder than earning coming in. Among the 8 companies on the analysis, Oriental Holding Berhad had the most stable dividend yield. There's also some of the companies that didn't disclose their dividend in their financial statement. Hence, their dividend yield can't be calculated.
It comes to the conclusion. So, we as investors need to know what we want from a certain companies before we invest to the certain companies. First, if we are seeking for the high profitability and efficiency ratio, we can go to the New Hong Fed Holding Berhad and Oriental Holding Berhad, which has a consistently high profit margin and efficient asset utilization. If we want to have stable profitability and liquidity, we can go to Tencent Holding Berhad that boosts consist profitability and have strong liquidity. If we want go to the company that have a strong growth potential, we can go to the Power Root Berhad, which has an increasing PE ratio that suggests investors anticipate to the future earning growth. Lastly, if we want to go to the company that have a lower risk, we can go to New Hong Fed Holding Berhad, which have a stable PE ratio that are improving solvency that might appeal to the risk-averse investor. All of these categories might help we as investors to know which company that we want to invest in the future. That's all from us. Thank you.